All okay. So let's start. How are you all? So in the last class, we have discussed the last topic that was a different financial market. These are the financial market we have discussed in the last class. So first of all, do let me know who regulates these market. Money market is regulated by whom? First, let me know money market is regulated by whom? RBI. Very good. Money market is regulated by no. Why you are saying SEBI, Ria ma'am? We have discussed now. Money market is a short-term market that is regulated by RBI. Okay, not the SEBI. Second, forex market, or we can call it a foreign exchange market. So forex market or foreign exchange market is regulated by whom? Very good. This is also regulated by RBI. Hana, forex market is also regulated by RBI. Correct. Next, if we talk about the capital market is regulated by whom? Capital market regulated by whom? Now that is SEBI. Capital market is regulated by whom? It is regulated by SEBI, Securities and Exchange Board of India. Okay. Now insurance market is regulated by Adda, Insurance Regulatory and Development Authority of India. Very good. So these are the different types of financial market, and this is regulated by them. As a capital market includes two types of market. Let me know the name of those markets. So we have discussed that capital market includes both the markets. What are the names of those markets? Now let's start. And now we have to discuss the certain history of Indian financial system. So when we are studying the Indian financial system overview, so we have to study how this financial system evolved. Like right now we have a different types of banks, scheduled banks, non-scheduled banks are there, non-banking financial institutions are there. Apart from that, money lenders are there. So we have to study how these institutions came into existence. And that's why we have to study the development of financial system. Not the recent development, but we are starting from the initial stages where we have started developing the financial institution in Indian economy. So this is the phases of development of financial system in our country. Very good. There are two types of market, that is debt market and equity market. That's correct. Okay, now the development stages, if we talk about, first of all, you can see that Indian financial system has come a long way from the times when finance was left basically in the hands of traders and merchants. And that was the informal financial system. Initially, the overall financial system was in the hands of the traders and merchants. And they were deciding by themselves whatever they want. According to that, they were deciding what rate of interest they want to charge and etc. But now after that, we can say now the financial system has been divided into two parts, and we have introduced the commercial bank, your payment bank, small finance bank. Recently introduced banks are the payment bank, small finance bank. Now, history has recorded the first commercial bank set up in India was Bank of Hindustan. So the first Bank of India. Now, this is very important. This statement is very important. You have to remember this. Like which particular bank was the first Bank of India, and the first Bank of India was Bank of Hindustan, established in the year 1770. Okay, so the commercial banking system, or I can say the formal financial system in our country, started in the year 1770. Now, similarly, the first insurance company to be set up in India was National Insurance Company in the year 1906, and the company is still in existence. So if we talk about how this financial system started, so the financial system started with the opening of first commercial bank, that was the Bank of Hindustan, and it has its headquarters in Kolkata, and it was established in the year 1770, right? And the first insurance company was established in the year 1906, and that was the National Insurance Company. Acha, what is the current name of this National Insurance Company? What we are calling this National Insurance Company, because you can see it is written here that it is still in existence. So what is the name of this National Insurance Company now? Let me know. So the Bank of Hindustan and National Insurance Company here is important to remember. Now the phases. If we talk about the development of financial system in India, it has been divided, or I can say segmented in a certain phase. It means phase 1, phase 2, phase 3. Accordingly, it has been divided. So there are certain phases that has been segmented to develop the financial system. So first we have a pre-independence era. Pre-independence means obviously from prior to 1947. So we got the independence in the year 1947. So before that, what used to happen in country, that we are going to discuss here. Achha, first let me know who started the paper currency. The paper currency formation started by whom in India? Because RBI was established in 1935, right? And from 1935, RBI started printing the currency. That was the paper currency. But before that, we used to have a paper currency or not? We used to have paper currency before that or not? Let me know. Okay, maximum are saying no. We used to have the paper currency, and the paper currency was used to be printed by the British government of India. There used to be the Paper Currency Act 1861. Under that particular act, the British government of India used to print the paper currency, right? And after 1935, RBI got this authority to print the paper currency. So the Paper Currency Act was executed, and the new act was introduced. That was the RBI Act 1934, whose section 22 talks about this, that RBI has the sole right to print all the denomination of currency except rupee 1. Only 1 rupee note will be printed by Government of India. All the other notes will be printed by RBI only, right? So now this is what we're talking about. Prior to 1947, RBI was established, but RBI was the private bank at that time. Why RBI was the private bank, we will be discussing further. Okay. Now, the second phase you can see here was from 1947 to 1991. So after independence, post independence you can call. And why till 1991? Because in 1991 we have introduced the LPG policy, and this was the biggest reform in Indian economy, right? So that's why this is the post independence part 1. Then post liberalization. Now why liberalization? 91 to 2010 it was post liberalization because of the LPG policy. Achha, do let me know the full form of LPG. Do let me know the full form of LPG policy. It is known as economic reform. You can call it a new market reform. You can call it a free economy, right? So free market reforms, you can call this policy. So LPG was introduced, and because of the LPG was introduced in 1991 by Dr. Manmohan Singh. He was the finance minister at that time in our country. So after that, we used to call the period the post-liberalization period. Okay, and the next one we have post-global financial crisis period. And that was what? The global crisis that we have faced in 2007-8. After that, whatever the period we are following right now, that is known as post-global financial crisis. Okay, now after a while, after a certain decade, we will start calling 2019, after 2019 era, as a post-COVID outbreak era. Maybe we can do so. Hana? So this is what the 4 phases of development of financial system in India. And the answer is very much correct. Liberalization, privatization, and globalization. Very good. LPG stand for liberalization, privatization, and globalization. Okay, now let's start with the first phase, that is the pre-independence era. Okay, so that starts prior to 1947. Now, what used to happen before 1947? Achha, Indian economy used to be socialistic economy. Now, what does socialistic economy means? We are going to study the economic system in the Indian economy chapters of this Indian economy, Indian financial system. That is module A and B. In the module A and B, we are going to discuss, or we are going to study economics here. Hai na? So the socialistic economic system is a part of your A and B module, but let's have a certain understanding. There are 3 economic systems: capitalistic. Second is we have socialistic, and third we have mixed. Now let me know what is the difference between these 3. What are these? What does socialistic economic system or capitalistic economic system or mixed economic system means? Okay. Ravi sir is saying government. Government what? Or you can say the system which is regulated by government is socialistic. Okay. Right. So everyone is saying the system which is regulated by government is your socialistics. Okay, ठीक है. So there are three economic systems. First, capitalistic economic system is a system which is, I can say, the system which is formulated by, or I can say governed by the private industries, that is capitalistic. Second, it is run by government, and mixed will be run by both the private and government both. Now, in case of capitalistic economy, we know private industrialist runs the economy in the capitalistic economy. It means what to produce, how to produce, for whom to produce. These three major questions of economy will be answered by the private industrialists here. And same will be answered by government in the socialistic, same will be answered by both in the mixed economy. And it's very basic. Capitalistic economy means the economy that will or that is run by the private industrialists. It's not like they are deciding the law and justice for our country. No, it means there are three major questions of every economy, like what to produce, how to produce, and for whom to produce. And if these three questions answer will be given by the private industrialists, that will be your capitalistic, and answer given by government, that is socialistic, and then the both, that will be a mixed. So capitalistic economy always work for the profit maximization because private industrialists are there and they focus on the profit maximization. Second, socialistic economy is the economy that focuses on what we can call it the social welfare, or providing social security to the people, providing social welfare to the people. That's what the main objective of the socialistic. And mixed economy has the objective of doing both. Right, so this is the capitalistic, socialistic, and mixed economy. Now, prior to independence, we used to have a socialistic economy that was working on social welfare mainly. Okay, so you can see here, the reminiscence of banking in India can be traced back to the 4th century BC in the Kautilya Arthashastra, which contains reference to creditors and lenders. Okay, and this is what we are saying, before 1947 this used to happen, and that was the reference that we have taken to creditors and lenders. Now you can see during the pre-independence phase a large number of banks were present in India, which was around 600, because the first Bank of India was established in 1770. That's why we used to have a lot of banks till then, but not all was successful. Right. Now, the establishment of Bank of Hindustan in the year 1770 in Calcutta, because it has the headquarters at Calcutta, marked the starting of the formal Indian financial system. So, the formal Indian financial system in India started in 1770 with the establishment of Bank of Hindustan. This bank, however, discontinued its services in 1832. Right. This bank failed, and in 1832, it stopped working. Now next, there were various banks that evolved after the Hindustan Bank, such as General Bank of India, 1786 to 1791, Odd Commercial Bank, 1881 to 1958. So this Odd Commercial Bank was the first commercial bank of what? Of limited liability. This was the first bank of limited liability, and because of the same reason, this bank failed. Because Awadh Commercial Bank was the first bank of limited liability, and because of this same reason, this particular bank failed. Clear? Achha, do let me know what does this limited liability bank means? What does this limited liability bank means? We have discussed yesterday that the liability of a bank is what the public deposit. The liability of a bank is what? Public deposit. And limited liability banks, it's very obvious that the bank which has a certain guidelines or restriction at the time of accepting the deposit. Like you have a limitations. The limited liability has been allowed to you, and because of this, this bank was failed because a limited deposits were accepted here, and the bank has taken the deposit and provided the loan to the customer, and customer did the default, and that's why bank was failed in your 1958 duration. Clear? Achha, do let me know, is there any bank who has a limited deposit acceptance policy right now? Yes, limited product and services. And when it comes to the bank's product and services, that is known as liability of a bank is what? Deposit. So you can say limited deposits. Very good, Dhiren sir. Now let me know, is right now any particular bank is there who has restrictions or who has a limited acceptance of deposit? Is there any bank? Very good. Payment banks are there. You can call it a Paytm bank or whatever, but the name of the bank is payment banks. So payment banks was introduced by RBI in 2015, and for the financial inclusion purpose, we have introduced this bank. Also, let me know, what is financial inclusion? What is financial inclusion? If you find a certain word, you do not know the meaning of that, do let me know, because each and every terminology is very important. Because I have told you in the first class, I have showed you in the first class what kind of questions can be asked. So each terminology meaning is very important to all of you, right? So if I talk about payment bank was established by RBI in 2015 for the purpose of financial inclusion. Right. And the payment bank has a restriction. Earlier in 2015, it has the restriction that only 1 lakh per customer. 1 lakh per customer is allowed to accept deposit. This is the limit for deposits. That the per customer can only deposit 1 lakh rupees in the payment bank. This was the limit of the payment bank. But now, this limit has been changed. Now, let me know what is the limit. Now, in 2020, RBI has changed this limit. The limit will be per customer, but not 1 lakh. It has been increased by RBI. What is the right now limit? Reaching banking to unbanking areas. Okay. You can say this is financial inclusion, but I have told you 3 things or a very important terminology you have to use, that is affordable cost. That is required. So now 2 lakh deposits can be accepted per customer under the payment bank, right? Now, if I talk about financial inclusion, do remember certain things about financial inclusion. Providing banking services is not the right definition for financial inclusion, because each and every bank is providing services, but each and every bank is charging high fee on the services also. So what is financial inclusion? It is the process. It is a process of what? To link each and every person with what? With financial product and services. Financial products and services, and that to be at an affordable cost. If there is no affordable cost, then this is not financial inclusion. Because if you are charging a fee, it will not be easy for everyone to link with the bank and financial institution. If you want each and everyone will be participating in the bank's financial product and services, then you need what? You need proper affordable cost, right? Very good. Affordable cost is required. Like if I want to open a bank account, there should not be any kind of restriction that I have to deposit 1 lakh rupees, 10 lakh rupees, 15 lakh rupees. No. Or 1,000 or 2,000 or 200 rupees. No. If I want to open a bank account, there should be affordable cost. That can be a 0, that can be 100, that can be 50. That should be decided by me. And then it will be known as your financial inclusion. So these terms are very important. What you are trying to do in the financial inclusion, you are trying to link each and every person with what? With the financial product and services, and how you want to link them at an affordable cost. This is what you have to focus on. Okay. Now, if you are giving definition to someone, focus on that. So Awadh Commercial Bank was there. It is also known as Awadh Commercial Bank. It failed due to limited liability. Okay. And it was the first bank of limited liability. Now, If I talk about the next part, this is saying that the earliest precursor of the present State Bank of India, namely Bank of Calcutta, was established in 1806. This was later renamed as Bank of Bengal in 1809. Now, what used to happen, like what happened earlier to form the SBI? So we can see here, there used to be the presidency banks. How many presidency banks were there? There used to be 3 presidency banks. First was, we have Bank of Calcutta. That was renamed. It was introduced in 1806. When it was introduced in 1806. But it was renamed as Bank of Bengal. And it was done in the year 1809. This was the first presidency bank. Hana, this was what? First presidency bank. Yes, there used to be 3 presidency banks in the country. Hana, and the first one was your Bank of Calcutta, that was renamed as Bank of Bengal in 1806. Sorry, 1809. Okay, now after that, in 1840, we got the second presidency bank, and that bank was Bank of Bombay. Bank of Bombay. It was established in 1840, right? After this, we got third presidency bank, and that bank named as Bank of Madras. And this bank was established in the year 1843. In which year? 1843, right? So these used to be the 3 presidency bank, Bank of Bengal, Bank of Bombay, and Bank of Madras. Now what happened in the year 1921? In which year? In the year 1921, all these banks were amalgamated. All these banks were amalgamated. Now, what does amalgamation means? If I talk about amalgamation, what does it mean? There are 3 terms. If I talk about merger, amalgamation, and then we have joint venture. These 3 terms are very common, and all of you have heard about this. If I talk about the merger, merger means what? When 2 companies are coming together, they are merging their 100% assets and liability and working together. That's a merger. But in case of merger, if A and B company will be merged, or 2 banks has been merged, now what name will be given? It can be depend on the mutual understanding. It can be a bank, it can be a B bank, or they can make their A or B bank. Hana, like they can join their both names. But in case of amalgamation, if you are amalgamating any of banks, 2 or 3 or 4, whatever banks you are merging, amalgamating, always the new name will be given. So if you merged, if you amalgamated A and B bank, then always the new name will be given. Let's say you have amalgamated A, B, and C bank. So you will get the D bank here. Always the new name will be given under the amalgamation. If you remember at the school, what we used to do in the chemistry, we used to amalgamate the chemicals, right? And always after amalgamating 1 or 2 chemicals, we used to get the new chemical. And that's what the amalgamation is. Always new company will be formed. A new bank will be formed. And joint venture, this is when companies work together for a mutual objective, or you can call her for a particular project. Hana, there is a certain project, and in that particular project, both the companies are working together. As soon as the project ends, company will divide their profit and then leave this joint venture, right? So amalgamation happened in these 3 presidency banks, and these 3 presidency banks made Imperial Bank of India. Which bank was formed? Imperial Bank of India was formed in 1921. And after this 1921, what we have done, we have established a State Bank of India. Okay, we have established what? We have established a State Bank of India. So this Imperial Bank of India was converted in State Bank of India on 1st of July 1955. On 1st of July 1955, we have made State Bank of India. So Imperial Bank of India changed into SBI. With the help of what? SBI Act 1955, we have made the SBI. So this is the history of present State Bank of India. And maximum number of banks were merged or amalgamated in which bank right now? SBI. And that is one of the reason SBI is the largest bank of our country. Because not only these presidency bank, apart from that, 8 associates banks of SBI was also merged in SBI. And Bharatiya Mahila Bank was merged in SBI. So many banks have been merged in State Bank of India, and that's how it became the biggest bank of our country. Right? Now, next. So this is what it is saying here, that the Bank of Calcutta was there in 1806. It was renamed as a Bank of Bengal in 1809. Then we got Bank of Madras, Bank of Bombay in 43, and Bank of Madras was 43, Bank of Bombay was 40. Another year is mistaken here. Bank of Bombay was launched or was established in 1840. Right? Do remember the year? And the Bank of Madras was established in 1843. Now, after that, all these banks has been amalgamated, and in 1921, it formed the Imperial Bank of India. And then this Imperial Bank of India converted into country's first public sector bank, and that named as a State Bank of India on 1st of July 1955. And which committee has formed for the SBI? Which committee was formed for SBI? It was A.D. Godewala Committee. It was formed in 1952 for the formation of SBI. Okay, it was the A.D. Godewala Committee in 1952 was formed for the formation of SBI, and SBI Act was introduced in 1955. So on 1st of July 1955, SBI was established after converting the name of Imperial Bank of India into SBI. So this is a proper history how SBI was established. Do remember that. Now, next, a few banks set up in 19th century are exist even today, such as Punjab National Bank, which was formed in 1894. Achha, these are the mistakes in the Macmillan book. This is not 1874, this is 1894. This is the mistake in the book also. Like why I am writing the both here, reason behind it, because so many bankers or so many of you are studying the Macmillan book. So do remember there are certain mistakes in the Macmillan book. So do cross check the things when you are studying from the book. So Bank of Bombay, they have written 1863. No, it is 1840. Hana? And Punjab National Bank, they have written 1874. No, it is 1894. Do remember these mistakes are there in the book. Now next. Apart from that, next we have during this phase, the Bombay Stock Exchange, that is the stock exchange regulated by SEBI, was also established in 1875, and it was the Asia's first stock exchange. Bombay Stock Exchange played a role in development of India's capital market, including the retail capital market, has enabled India's corporate sector to grow. Now, what is Bombay Stock Exchange? Bombay Stock Exchange, if I talk about, it was established in 1875, as you can see here. But Bombay Stock Exchange have a very good history. It was established in 1875. It used to be known as National Stock Exchange of the country. Okay, if I talk about the Bombay Stock Exchange, it is the first stock exchange of our country. But Bombay Stock Exchange was not the real name when it was established. Hana, it was not the real name when it was established. So what was the real name of Bombay Stock Exchange? No. In case of these presidency bank, there used to be 3 presidency banks. Reasons, Britishers was there in India, and they have divided the country into 3 presidency. So they have given the name to the banks as the presidency banks. Okay, Raj sir. And after that, these presidency banks have been merged to the amalgamated to the Imperial Bank, and then SBI was created. I hope it is clear now. So name has been given to the country. So the certain part of the country used to be known as the presidency, and that's why the name presidency has come up. Right now, we were talking about Bombay Stock Exchange. It used to be known as Bombay Stock Exchange. It used to be known as early Native Share and Stock Brokers of India. Native Share and Stock Brokers Association. Hana? Association. So this was the old name of Bombay Stock Exchange, and it was known as till 1957. After that, its name changed into Bombay Stock Exchange. Right, and it is the oldest stock exchange, or I can say the fastest stock exchange, not only in India but in Asia. Okay, chalo next. Now, the pre-independence phase during 1920s was marked as an extreme turbulence in the financial market, which led to the closing down of a number of banks. This supported the establishment of banking regulators also. So, setting up a central bank, namely Reserve Bank of India, was the recommendation of Hilton Young Commission in 1934. So, sorry, 35. But actually, it is not the 1935 when the recommendation has been done. I will tell you when it was introduced. 1 second. Okay, so if I talk about RBI has a very interesting history. From first of all, in 1928, the Hilton Young Commission came, or before that, I can say in 1926, the Hilton Young Commission first time recommended to form RBI. So the first time establishment of RBI was talked in the year 1926, but in 1928, this Hilton Young Commission was rejected. The full form is written in PDF, so that's why I'm not writing on the board, right? The full form of HYC is what? Hilton Young Commission. It also known as Royal Commission on Indian Currency. Hilton Young Commission is also known as what? Royal Commission on Indian Currency. And both are same. So it was rejected. After that, again in the year 1934, Central Bank Investigation Committee was introduced. Central Bank Investigation Committee was introduced, and the Central Bank Investigation Committee studied the report of Hilton Young Commission and made certain changes. And after making certain changes in 1935, in 1934, RBI Act was introduced. Okay, and in 1935, and that was the date 1st of April 1935, establishment of RBI was done. Okay, establishment of RBI was done. So when RBI was established on 1st of April 1935. So let me know, if I talk about RBI's establishment, it happened on 1st of April 1935, right? So was RBI a government's bank at that time or the private bank? RBI was the government banks at that time or a private bank? Let me know. It was a government or it was a private bank? If you don't know the answer, just write immediately don't know. Okay, I'm getting the answer. That is private bank. Yes, that was private bank. Actually, to build RBI, we needed a certain capital. The initial capital was required to formulate the RBI or to establish the RBI. We required the certain capital, and the government of India didn't have that capital. But it was very urgent to establish the Reserve Bank of India. The reason was this, because if we talk about RBI, before RBI, what used to happen there was what can I say? The private banks were more focused on establishing or getting the profits or earning the funds. Right, they were more focused about earning the funds in comparison to development of the country. So that's why it has been said that the certain central bank is required who is going to regulate the bank so that they will be working on the development of the country but not on their own profit. So that's why RBI was established. So RBI was Private Shareholders Bank. It means to establish RBI, we needed a certain capital, and that capital was given by the private shareholders, individual persons. If you heard about the name, if you heard the name of Devi Ahilya, she was the Devi, or she was the Maharani from Indore. So she was also a shareholder in RBI's shares. So that's what RBI used to be known as. But what happened on 1st of January 1949, the nationalization of RBI was done. the nationalization of RBI was done. And from that particular day, RBI is the Bank of Government of India, right? From that particular day, RBI is the Bank of Government of India. I hope it's clear. Let me know. Okay, clear. So this was the history of RBI. Do remember this. Hana? So Hilton Young Commission was not in the 1935. It was introduced in 1926 first. Next. The regulations of foreign exchange market, that's a forex market, and this forex market is regulated by RBI, right? Also originated during the phase with the implementation of Defense of India rules on 3rd of September 1939, which coincided with the commencement of World War II. So these draconian regulations were superseded by the equally tough legislation in 1947, that was the FARA, Foreign Exchange Regulation Act. Now, why we are saying equally tough legislation in 1940? What does it mean equally tough? Because the FARA was there and it has introduced lot of restrictions in the foreign exchange transaction. The reason behind it is that if I talk about the foreign exchange regulations means under the FARA, there are so many restrictions here. There were so many regulations that has been given by the RBI that if you want to exchange the foreign currency, there is a limit that only this limit will be exchanged. If you are doing export import, then also there was restriction. If you are going for a medical treatment, there was restriction. If you are going for a education, there was a restriction. So many restrictions were there in the FARA. That's why we are saying it was a tough legislation. It was a tough act that has given a lot of restrictions in the foreign exchange transactions. Okay. Now, next. So, FARA stands for Foreign Exchange Regulation Acts. It was introduced in 1947. And in 1973, it has certain changed the regulations. Now, the pre-independence phase was one in the which majority of small-sized banks failed to function properly and were unable to gain the people's confidence. So, people were more associated with the money lenders, unregulated players for meeting their savings and borrowing needs. So people were not trusting on the banks. And that's why in the last class, yesterday, we have studied that the informal financial system also had its importance, also had its advantages at the early time, because people were not trusting on the banks. They were trusting on the money lenders. That's why the informal system had the importance in the economy at the early times. Right, Acha. If I talk about the FARA, right now is FARA working? Let me know. Right now is FARA working? Foreign Exchange Regulation Act. Is it working right now? Yes or no? Earlier it was introduced in 1947 and it was fully amended in 1973. Right? Okay, now then this FARA was replaced by FAMA, Foreign Exchange Management Act 1999. This was 1973. Before that, it was 1947. Okay, so why it has been replaced? FAMA Act was created in 1999, but it started its implementation in 2000. Okay, now Foreign Exchange Regulation Act represents the regulations. It means this act has a lot of restrictions, a lot of regulations in it. But in case of FAMA, it used to have management. It means it was talking about the management. The Foreign Exchange Management Act is what? It's simply a management. Management means a certain restrictions was removed, and it has been said that whatever foreign currency is coming, whatever foreign currency is going from India, all will be managed by FARA. No restrictions will be introduced. And why this has been done? Because in 1991, what was introduced? LPG was introduced. And under this LPG, this was the main reason. That is globalization. What does globalization means? Globalization means to link Indian economy with world economy. Globalization means to link Indian economy with world economy. It's not FAMA, Ravi sir. It is FEMA. FAMA. Foreign Exchange Management Act it is. Right. Now, so in 1991, we have done globalization. Globalization means to link Indian economy with world economies. It means in globalization, the Indian government said that there is no restriction in export import. Whatever you want to export, whatever you want to import, you can do that, because now the Indian economy is an open economy. Open economy is a type of economy. There is no restrictions, where there is no restrictions related to anything of foreign trade. That is known as your open economy. So because after the globalization, Indian economy became open economy, so it was very hard to follow the rules of FARA. Because once you are saying that economy has been globalized, you can export, import whatever you want, and at the other side you are saying no, you have to follow the rules, regulations, or there will be restrictions in the exchange of currency. How they both are going to work together? That's why FARA was replaced with the FAMA. I hope it is clear. Let me know. And that's why FARA was replaced. Clear? Till now, whatever we have discussed, it is clear to all of you. Let me know. Clear to all. Now, next. Post-independence. That is from 1947 to 1991, pre-liberalization period, you can see. So the second phase of development of financial system in India, post-independence, India launched into a stage for social development and development of the country's infrastructure. And the organization of Indian financial system during this period evolved in response to the imperatives of planned economic development. Okay, so what we are saying, the second phase of the development of financial system was the post-independence period. And this post-independence period launched a stage for the social development. A development of countries' infrastructure. Social development means, like if you talk about social infrastructure, we are talking about bridge, roads, and overbridge and etc., or buildings and etc. that we are talking about that make people's life easier. That is known as your social infrastructure. So that's what we are saying here. In this particular stage, we focused on what? We focused on the social development, and we have started developing the infrastructure. That's why the Indian financial system during this period evolved to respond to the imperatives of the planned economic development. What is planned economic development? Now you can see planned economic development is related to the planning commission. Let me know when was the first 5-year plan was introduced by planning commission. Let me know. What was the first 5-year plan duration? Very good, 1951. From 1951 to 56, the first 5-year plan was going on. And that's what the planned economic development we are talking about. Because in the first 5-year plan in 1951, we have discussed what we want to develop. And accordingly, the Indian financial system started working on that infrastructure development or spending money for the social development. And that's what the planned economic development means. Okay, I hope it is clear. Not 52, it's 51. In 1950, Planning Commission was established, and from 1951, we have started making the first 5-year plan. Okay? The class starts at 7 to 8 p.m. This is the timing of the class. Now, next. Next, we are saying here the economic growth with social justice was enshrined in the Indian Constitution under the directive principle of state policy, and the scheme planned economic development was initiated in 1951. That was the launch of the first 5-year plan. It was the launch of what? It was the launch of the first 5-year plan. Now, what does social justice means? What does social justice means? Okay, see, social justice means making opportunities or making it available the opportunities equally for everyone. Hana, that's what the social justice means. Like equality, you should be introducing here. Hana? Now, this led to the adoption of mixed economy as the pattern of industrial development in which a complementary role was conceived for the public and private sector. Now, yeah, very good. Equal resources to all. It means equal opportunities for all you are providing. That's the social justice. Very good, Ravi sir. Now, sorry, Dhiren sir. Now, if I talk about mixed economy, and because of this planned economic situation, like you have given a planned economic development here because of the 5-year plan, we have introduced the mixed economy here. And mixed economy was a part of LPG also because the privatization has been done here. And privatization means what? Transferring the ownership from public sector or from government to the private industries. That is the meaning of the privatization, and that's what has been done in the 1991 also. But before that, because we were focusing on the social development, that's why the adoption of mixed economy has been done. Acha, have you heard the name of Dr. Raghuram Rajan? I know obviously everyone have heard about have heard his name. Yes or no? He was the what? Dr. Raghuram Rajan. Let me know. He was. He was governor of RBI. Why you guys are taking so much time? RBI governor. He was the RBI governor. 23rd governor of RBI from 2013 to 2016. He was the governor in RBI, right? So he has given a certain response to the government of India to reduce the NPA. So he said that it is very important if we use the blended finance way or blended finance method to finance the infrastructure development in our country. Like infrastructure development, you are making roads, highways, bridge and overbridge and etc. Whatever infrastructure you are making. For that, Mr. Raghuram Rajan said that blended finance is a very good way. Now, what does blended finance means? It means the finance, the money to develop, or the money that is required to develop the roads and all, will be shared between public and private. Public and private means whenever you're talking about public in economic subject, it means government. Okay, so the government and private sector will share the burden of expenditure of the infrastructure development. That's a blended finance. And that was done at the time of first 5-year plan also. That's why mixed economy was introduced. Okay. Now, the other point is saying in this phase commenced with the nationalization of RBI also in 1948. Okay, but the day of nationalization was 1st January 1949. On 1st January 1949, RBI was nationalized. Okay. Now, followed by the State Bank of India in 1955. Now, apart from that, if we talk about in the succeeding year, on 1st of September 1956, 245 private insurance companies were nationalized to form what? To form the Life Insurance Corporation of India. How many companies? 245 private companies was formed, and then LIC has become. And you can see easily that's why LIC is the biggest insurance company, and that's why SBI is the biggest bank of our country. Now, while the economy was coming under increasing degrees of socialism, bank finance was still outreach of most of population. Obviously, because people were not trusting on the banks, and people were not. Imperial Bank of India was under the ownership of government after the independence, but people were not trusting on Imperial Bank of India because they have this mentality. This bank was formed by Britishers. Maybe they will take our money. So that's why the name of Imperial Bank of India changed into SBI, so that people will start trusting on the bank. State Bank of India. It means it's India's bank. You can open account. You can trust on the bank. That's why it has been done. So while the economy was coming under increasing degree of socialism, the bank finance was still out of the reach of most of the population. The money lenders have become too exploitative, and poor people could not afford to take the bank loan due to the lack of collaterals. Collateral means security. If I am taking loan, I have to give something as a security to the bank. Otherwise, bank will not provide me the loan. So this issue was there. Now, the bank themselves were selectively catering to large industries and businesses, and the slowing growth of the agricultural sector, small-scale industries, right? and exports showing its ill effects. This was followed by 2 years of crippling drought in 1964 and 1968. 65 and 66, and the country had to resort to heavy imports of food grains, financial aid from overseas. So if we talk about the duration of 1964, 65, 66, there was a drought, है and also war. India-Pak war, India-China war was there. So the food grains was not there, and for that we have to import the food grains. We have to import the funds also, and like we have to ask the funds from the foreign countries also. So this issue we have faced. At the same time, poor people were not able to get the credit, and at the same time, moneylenders were exploiting the people, and they were charging too much interest rate from the people. So these all was coming together at the same time, and that's why the third 5-year plan of the country was failed. That's why the third 5-year of country plan of the planning commission was failed. That's why the plan holiday of the 3 years was introduced by government of India. These all were the reason. Now, in an attempt to bring in tight social control over the banking sector, the government nationalized the 14 private sector banks in 1969, and after that 6 more private sector banks in 1980. So nationalization of banks was done 2 times. Now, what is nationalization? Let's understand that also. What is nationalization? So nationalization means simply selling the ownership of private companies to the government. Like we have any private entity. Okay, and when the shares of this entity, shares 51 or more than 51 shares, is purchased by whom? Government. Then this process is known as nationalization. So whenever government of any country purchases the 51% shares or more than shares of the private entity, that process is known as nationalization. And why it has been done? So that ownership transferred to the government. Why it has been done? To transfer the ownership to the government. And it has been done in India for 2 times. 2 times we have done the nationalization. The first nationalization was done in 1969, and 14 banks were nationalized. Why only 14 banks? Does in 1969 only we had 14 banks? We only had 14 banks in 1969. No, na. In 1770, the first Bank of India was launched. That was the Bank of Hindustan. And after that, so many banks was introduced. So many banks was established. So it doesn't mean only 14 banks were there. But yes, the criteria was there. The minimum deposit criteria. That was 50 crores. So those banks who has the public deposit minimum of 50 crores, only those banks were purchased by government of India. And at that time, we had only 14 banks, 14 such banks. So the 14 major commercial banks was purchased by the government of India, and that was the first nationalization. Now, the second nationalization happened in 1980. And the 6 major commercial banks were nationalized. Why only 6? Because again, there was a criteria of minimum deposit of 200 crores. Minimum deposit of 200 crores. Okay, so total how many banks were nationalized? Total how many banks were nationalized? 20 banks were nationalized. How many banks were nationalized? Total 20 banks were nationalized. Clear? But at present, we have only 11 nationalized banks. How many banks we have? 11 nationalized banks that are present in India. So where are the other 9 banks that has been merged? Not 12, it's 11. 12 are the public sector banks in India, but the nationalized bank only 11. Okay. Now, so this is the nationalization process that happened. Now, how this nationalization happened and how many banks are there, that we will be discussing, but in next class. Right now, you can see in 1969, these are the 14 banks that was nationalized. And in 1980, these are the 6 banks which were nationalized. Okay, so all these banks used to be the private bank, but now they have become government bank after the nationalization of 1969 and 1980, and it was done under the Bank Nationalization Act. It was done under the Bank Nationalization Act 1969. And this order of nationalization of bank was given by the Prime Minister, that was Mrs. Indira Gandhi. At both time, Hana, at both time, she was the Prime Minister of the country, and she has given the order to nationalize the banks. And it was required because the private banks were working more for their own profit, for the profit maximization. And at the ground level, no authority was there who is going to check that whatever is happening in the country is right or not, if the banks are focusing on the development of the economy or not. So that's why it is very important. After having RBI also, we were facing the same issue. Reason was the same, that at the ground level, the government has, or RBI has, no approach, and that's why it has said that should be a certain public sector bank which actually at the ground level are going to do what? The social welfare. Clear? Let me know any doubt in today's session. Is there any doubt in today's session? Govind sir, you cannot download the PDF, but yes, what you can see, you can check the PDF on the application. In the practice book, you will find the PDF available.